Hello, bacho. Hello, students. I hope you all are doing good and fine. So, as we have started with a discussion regarding a pre-mock, that is your FR December pre-mock. So, we have completed your section A. We have seen 15 questions out of that 15. 12 to 13 questions. It was very straightforward and easy. Then we started with a discussion regarding section B. So section B, the first question we have completed. If you have not yet watched the recording, please do watch it. That the section A part is done. Section B, the first question, Danny company is done. Danny company. This 5 questions are very simple and easy question we have seen. Now we'll be starting with the next question, Harry. Harry. Chalo then. Yes, so the following information relates to Harry in the year ended 30th December, 30th September 2007. What is very important, sir? It's very important that we see the year end first. So it's Harry Company, it's one of the company, its year end is what? 30th September 2007, sir. Okay, as I can see the heading revenue, the question could be regarding revenue, sir. Okay, then the next ordinary shares. Okay, a question is regarding ordinary shares. Okay, I can see some word as right issue, so I can think the question could be regarding EPS. Sir, yes, sir, favorite topic, sir, EPS. Sir, depreciation. Sir, depreciation, IS 16, sir. SLM basis, reducing balance method. They have given two methods. They mentioned that which method should we use. Yes, sir. And remember, depreciation. We have three methods, and I mentioned in the class, most probably two methods are tested for you. WDV and straight line basis. So let us see what is the question. So then sustainability report. Are baap re baap. So sustainability report, we have IFRS S1 only. IFRS S2 climate change is not in your syllabus. Sir, IFRS S1 focuses on what? What is the objective of IFRS S1? So the objective of IFRS S1 is the risk and opportunities relating to the business performance, cash flows, how it will affect, etc. We have to consider all these points. Yes, sir. Let us see now. Okay, let us read the first question. September 30th September 2007 is the year end revenue. Include in H draft revenue. Okay. In the draft revenue, they have already prepared the PNL. In that PNL, they have already recorded a revenue of how much? Draft revenue of 20 million. Okay, they mentioned that H company has recorded a revenue of 20 million. Relates to a machine sold to a customer. So they are selling a machine to a customer, they are recording 20 million. What is the issue in that? No issues as of now. On behalf of a number of manufacturers. On behalf of number of manufacturers. So they are selling this machine to some customer on behalf of some manufacturer. If they are selling on behalf of manufacturer, what can come into your mind? Sir, I think principal and agent. Sir, so principal and agent, it can be a question regarding principal and agent. So what did we learn under principal and agent? Principal will recognize the revenue gross. Sir, agent will recognize the revenue net, only the commission amount. Principal will recognize the entire amount as revenue gross amount. So that commission what they pay, should we net it off and do it? No. Will not net it off. It will be recognized as an expense separately. We recognize the revenue at gross. Sir, how should we identify whether a party is a principal? The party has the right to set the price. Risk of the inventory belongs to the party. All these are the things. Chalo then let us see that. Okay, sir. 18 million is included in the H draft COS. Okay, they are saying that Harry has recorded 20 million in revenue and 18 million in cost of sales. Yes, sir. But, sir, if it is a principal and agent, it should not be recognized. Then, representing the amount payable to the manufacturer. Okay, 18 million is amount that is payable to manufacturer. The difference of 2 million is the commission that the manufacturer have agreed that H can retain as a commission. Now, you only say. Clearly, in the question, they are stating that the 2 million difference is a profit for whom? H company. As what, sir? This 2 million is a commission from whom? H company. If it is a commission of 2 million, can they record the entire? Can they record the entire amount? Can they recognize the entire amount here? No, Baba. So they have done what? They have included cost of sales as 18 million. Will it be a cost for the agent? Never. Only he will recognize commission here 2 million. Then The manufacturer sets the selling price of the machine. They are mentioning that the manufacturer sets. So this is an indicator principle and have a responsibility for repairing any faults with the machines. We have learned it, bete. The party which has the right to set the price is principal. Yes, sir. The party who has the obligation to fulfill the responsibility has the obligation to fulfill each and everything. So here the responsibility is on the head of manufacturer. So manufacturer is the principal. So principal will recognize the revenue on what basis? So principal will recognize the revenue on gross basis. But here this H is Harry. Harry is an agent. Agent will recognize revenue for 2 million only. But they have recognized the full revenue of 20 million. If you remember in the class also we had done the same question, basic question also, and in the your test series also, in the test series also same question was that. Now same what they have done, now we have to remove the impact. Harry company has recorded revenue of 20 million and 18 million cost of sale, but what is the revenue? Harry can record only 2 million. So what will I say? Debit revenue, I will decrease the revenue by 18, and cost of sales also I will decrease it by 18, because it's not a cost of sale for him. He have received 20 million. He have received 20 million. Out of the 20 million, 2 million he will record profit. And sir, what he will do for the remaining 18? He will record as a payable. What is the entry he have to pass? Debit, excuse me, credit. Revenue of 2 million. Bank that is coming in for 20 million. And credit liability that is payable to whom, sir? The manufacturer. We have to do this, but they have done wrong. Let us see what could be the question. Then ordinary shares, sir. Let us see. Excuse me. Year end is 30th September 2007. At 1st October 2006, Harry had 36 million equity shares in issue. How many shares in issue? 36 million shares in issue. On 1st January 2007, Harry made a fully subscribed right issue. A fully subscribed right issue of one new share for every 4 shares. Sir, on the opening at the start of the year, they had 36 million. And on 1st January, that means after how many months? October, November, December. Sir, after 3 months, they have made a right issue. One for 4 shares. Sir, for every one share, we are giving how many shares? 4 shares. Sir. Held at a price of 2.80. So, what is the exercise price? The price to this 2.80. The market price of the equity shares of H immediately before the issue. So, what is the price before the issue? 3.8. So what could be the question here? The question could be calculate weighted average number of shares or EPS. Let us see. So what are the steps? If you remember, 5 steps I had given in the class for right to use it. Step number one, theoretical X right price. Theoretical X right price means price of the shares once the right issue is done. Then RAF, right adjustment factor, because right issue includes two things: bonus part, market issue. That bonus part we adjust as per RAF, and this as per your normal accounting. So RAF, then sir, we calculate the weighted average number of shares. Then we take profit attributable divided by weighted average number of shares. We get EPS. So previous year EPS we restate it. Yes, sir. Then depreciation. At 31st December to 30th March 2007, Harry reviewed its depreciation method and useful life and elected to change the depreciation method of machine from SLM to this one. Now, whenever we change the method, depreciation method, is this what? Accounting policy? No, it's not accounting policy. It's accounting estimate, change in estimate, sir. Yes, sir. Then sustainability report. The directors of H have decided to prepare a sustainability report for the year ended 30th September. However, are unsure about the requirements of IFRS sustainability disclosure standard. What are the this one? As I mentioned for your syllabus, IFRS S1 is the what is the core content? Sir, governance. Then we have what strategies. So then we have what, sir? Risk and then targets. These are the four important things. Let us see. The question could be regarding that. Yes, sir. Chalo, then let us read the first. What adjustment need to be made to revenue in respect of the commission based sale by Harry? What is the adjustment? What is the right adjustment we have to do? Correct adjustment. So see here now. Sir, reduce revenue by 20 million. Do we reduce the entire revenue, Baba? Nine, 2 million revenue the party H will recognize. Yes, sir. And cost of sales. नहीं ये तो गलत ही है पूरा. Then increase revenue, no sir. Increase revenue by 2 million. No, sir. Reduce revenue by 18 million and reduce cost of sale by 18 million. Yes or no? Yes, sir. The option is what? D here. D is the right option because we remove the revenue of 18 million and we reduce the cost of sales here. We reduce this and we include this value. A very easy and a simple question. I have already explained here that 20 million full amount, they can't recognize the full amount as revenue. They can only recognize the revenue relating to commission. And they have recorded it. And they have recorded the amount that relates to what's a commission. Yes, sir. Then chalo the next one. The next part of the question. Calculate, okay, what is the weighted average number of shares to be used in the calculation of HEPS, basic EPS? See, weighted average number of shares, we have to mention it. So now see the timeline. If you remember in the class also we follow the timeline approach only, sir. So what is the date here? First October 2006, then here it is 30th September only, yes, 30th September 2007, sir. Yes. Then on 1st January 2007, right issue is done. Right issue. Yes, sir. 1st January, you know. Yes, 1st October, 36 million shares are there. So on this date, how many shares? 36 million, sir. Then here, right issue is done. So 3 months, 9 months. So now here, what we calculate? First thing, step 1, theoretical X right price. Now what will be your theoretical X right price? Theoretical X right price. So I mention you a shortcut to do this. See now, one share for every four shares. One share value will be at what? One share value will be at 2.8 and four shares at 3.8. Sir, existing share 41, it is at 3.80, 2.80. So how much this will be? कितना होगा ये? 15.2, sir. You have done this. You have done this calculation better in the class. You have done in your test series also. So 18 by 5 I am getting. So this is 18 divided by 5, that is 3.6. Step number 2, RAF. RAF is what? Market price divided by TERP. So market price is 3.80 divided by 3.6. So it is 3.8 divided by 3.6. Yes, sir. Now then step number 3 is what? So calculation of what? Your calculation of your weighted average number of shares. See now. So 36 million shares are there for 3 months. So for this, we have to apply the RAF here. We have to apply the RAF here. So that is 3.8 divided by 3.6, sir. So then, sir, your problem was that the problem is sought out. We have to consider the right issue. So how many shares are there? 36 divided by 4. 36 divided by 4. So 9 shares are given. So plus 36. So the number of shares that becomes here is 45. So did we consider the RF? Yes, better consider. Into 9 divided by 12. So the number of shares will be how many? Into 9 divided by 12. It is 33.75 here. And here it is 36 into 3.8 divided by 3.6 into 3 divided by 12. It is 9.5. So 33.7. It is 43.25. So what is the number of shares? The number of shares which we are getting is $43.250 million. So have they mentioned anything? Okay, nothing they have mentioned. If they have not mentioned anything, we have to write the complete answer. That is 43,250,000 shares. This is your answer. A very easy and a simple part which you have done 1 or 2 days before in your test series also. The same part. So I hope this was a easy and a simple question. Yes, sir. A very easy and a simple question. RAF we have calculated, we have adjusted, we got this as the answer. Chalo, the next one. 3. Which four of the following should be the core content? Are baap re baap. Core content of H sustainability report according to IFRS S1. So what is the core content? The core content is what? The four things, sir. Sir, governance, yes sir. Will climate change come? No sir, climate change is out of the box. If you remember, climate change is out of the box. So carbon matrix, we did not learn about carbon matrix. We have learned metrics and targets. That is that, sir. Strategy, yes, sir. This also will be included. I have a doubt on this. Let us wait. Sir, risk management, yes, sir. Metrics and targets, yes, sir. So these are the four things. This also will be out of the box. So two is wrong. This is wrong. Two is included. Two is included here. So the option is what? A, 1, 4, 5, and 6. D is the right option. A very easy, straightforward question. In the class, if you remember, we had done a same question, it was same MCQ also. Yes sir. Now when we do sustainability, what do we follow in sustainability? Can I say we follow the characteristics, qualitative characteristics, the fundamental qualitative characteristics, yes or no, which are common? Relevance and faithful representation. So let us see that. What are the common fundamental characteristics of useful information included in both IFRS sustainability standard and IFR? So semi fundamental, arey baap re baap, ticket fundamental, easy, straightforward question. Blindly you can take it. Blindly in the sense means reading the question and then ticking. It's not that blindly ki, sir, आँख बंद करिए टिक करेंगे. See now, sir, relevance and faithful representation, yes sir. Relevance and verifiability, no sir. Sir, relevance and materiality, no. Materiality is part of relevance. Sir, materiality faithful, nahi sir. Sara kuch wrong hai. Straightforward question, yes sir. So this is also, sir, this question was too lengthy, sir. When we revenue we have done, ordinary sir, depreciation, sustainability report question. So why they have given this depreciation? Let us see. How should the change in depreciation method be treated? A very easy and a simple question. Are you should be knowing this, Baba. In class also so many questions. If you remember in your class, I have given in your test series. In test series also a case scenario question. In that fifth question, same question it was. Chalo. Depreciation method. Retrospective as a prior period. No, sir. A change in accounting policy. No, it's not a change in accounting policy. Change in accounting policy is what? Cost model and revaluation model. Understand that. It's not this one. A change in accounting estimate with prospective treatment. Yes, sir. Your answer is B1. A revaluation change with prospective adjustment. It's not about asking about revaluation. It's a very simple question. So with this question also is done. A very easy and a simple question. Harry Company. So the first question also which we have done was easy, and the second question also was easy. So I hope with this question is done. So if you have any doubts, you can connect with me. My number is 6361764852. And believe me, the paper will be easy, questions will be easy. As I mentioned in the class, the hack to pass FR is what simple. That out of 15 questions, 9 questions will be easy. Avoid silly mistakes there. Any doubts, you can connect with me. If you have any doubts regarding FR, SBR, I can guide you. So with this, let us end the session. So the next case study, the next video you can watch. So bye bye. Have a good day. Signing off. Radhe Radhe to everyone.